What's up, guys? Welcome to the first live session of the new year. I'm RP Forex. We're back at it again on the charts. New year, new pips to be made. On behalf of FXL Forex Lens, I want to give you guys a happy New Year wish, and hopefully you get blessings and prosperity this year. And we have a great time in the trade room, and people make some gains. And not only that, they also learn how to trade, and they're well on their way to become financially free. So this new year started off with a bang, and it wasn't the fireworks, it was Trump back at it again. This time, he let his actions do the talking when he made an attack on a general of Iran, Salmani. If you haven't been keeping up with the news, we know the tensions with Iran has been constant throughout the year. A lot of the things with the nuclear deal. And so recently, Iran has backed out of the deal, and they were supposedly going to attack, they did attack the U.S. Embassy, but they're going to attack other U.S. camps in Iraq and Iran, and they're also going to kill any American citizens in Iran. And so Trump decided to take the attack on Salmani, and it was a success. And this attack was done on January 2nd, 2020. And so they had 3 days of mourning, and that actually ends today. So if they're going to give a response, it'd start from here onwards. And the markets reacted pretty volatile. In terms of volatility, the market reacted pretty well and pretty expected. You saw crude oil go to $70, $70 per barrel, and we'll talk about that in a bit. But we did make some really bold predictions before the year started. And so we're going to take a look at those predictions. But before we do that, just a quick heads up. We're kind of fixing the Telegram channels right now. And we're actually going to get everyone onto these new channels that we've been testing on. And so later today or, sometime this week, you'll get an email with instructions on how to get onto the new channels. And that way you'll be in the thick of things, and you'll get all the signals for the new year. So if you have any other questions or issues with your account or whatever, you can always direct them to support@forexlens.com, and we'll take care of you there. Without further ado, we're going to take a look at EURUSD, which we analyzed before the year ended. And on the daily time frame, you can see it's kind of in a nice place right now, right at our top trend line of our ascending channel. And if we zoom in, you can see, at the end of the year, the last week we traded, we did have a short that made around 40 pips before going back to entry. And this rally was fueled by the attack on Salmani on January 2nd. And for the next 3 days, we had, a mini bull run till we hit some resistance at 1.11700. And since then, we've come back down. And then earlier in the day, we had a bunch of service PMI data come out better than expected all across the board for the euro. And this is a pretty good start for the euro, especially with the tensions with Iran and the US. It could make some, short-term gains until the situation calms down. And so right now, I would honestly just wait for some closure below our secondary resistance, 1.11500. Just to confirm we're going lower, just because this isn't a kind of a tricky spot, because it could start making higher highs, and obviously the whole short idea has gone off. But the bias for now is still short for the 2020 year. And we talked about the lows it could go down to make as low as 1.0500. So we'll see where that goes, but not much has happened over the holidays as expected with a decrease in volume, but definitely that attack has pumped something back into New Year, and we're kind of back in the thick of things. Taking a peek at the fundamental schedule. Today's pretty quiet. Tomorrow is as well. We do have some USD PMI in the morning. Nothing too major. Wednesday is also pretty quiet. Thursday is similar, and I think Friday, so Friday we have NFP. So it's gonna be a crazy week, especially with the developments with the Iran and US conflict. So even without the fundamentals, it's gonna be pretty chaotic. And then obviously Friday we have the NFP. So the forecast is right on par with what it was before the new year. So I don't think we'll see any changes there. But I'm bullish on the dollar for the year, so I think that's why I see shorts for EURUSD. And they said they're not going to cut rates anymore. We had great inflation data before the year ended, and with Iran getting pressured with extra sanctions, it might be good for the dollar. So we'll see. So euro, just be patient. We have a secondary resistance here. Let's see where it takes us. Let me say hi to everyone on the portal. And let's take a look at pound dollar. And so pound dollar, we had a short that was given, and 150 pips before the year ended. Pretty nice short trade, and it did go further down. And we did say that could be a possibility if we close below this hourly support at 1.33100. And so we did get that. We got a short fallout before you bounce back. And so if we take a look at our monthly time frame, you can kind of see the pound dollar, the downtrend from July 2014 coming to this right here. We did get a break above that trend line, but you can see from the monthly we've ran into some solid resistance, and so I'd be cautious about buys right now. Although the monthly candle is a hammer, so it could flip back up into a bullish candle, but the resistance is definitely there, and depending on obviously the US Iran stuff, the dollar could get stronger or weaker. But Boris Johnson has definitely bought some buyers back into the pound, so that's one of the reasons why our bias was kind of mixed for pound dollar when we ended the year, because Boris Johnson was definitely kind of a safe haven for the pound, because it was about to make new lows, historic lows, but those election results popped it back up. The stronger dollar, however, could place a stall on the pound making gains, especially as Brexit gets finalized. And a key event that's happening very soon is the trade war. So China is going to travel to US. I think a China delegate will travel on January 13th to sign phase 1 of the deal. And so this time there's not really a fallout like we had previously. It's all about putting the pen to the paper, and we'll have phase 1 done. So thankfully that sort of commotion that plagued a lot of the FX year last year is done with, but we do have the potential for World War III to happen. So there's always something. We didn't really get ideal conditions to trade since I think 2017, but that's the market, and that's the world we live in. So pound dollar still is a mixed bias. In terms of intraday setups, don't really see much, especially since the markets are just opening, but there is a possibility that we could have a short after a break retest and rejection from down here, because that's what's kind of doing right now. A huge fallout, just reacting to the attack on Salmani. So all I know is our bull predictions from this end of the year are still pretty good. We're just going to have to look for entries tomorrow morning after the PMI data. Going on to gold, which was another major player. So gold was obviously in a huge high as 1588 before coming back down. A lot of it's fueled by the attack and the developments after which, but we'll look at the monthly to see. So the monthly is pretty clear. We talked about these two scenarios, and so when gold went to make all-time highs at around 2,000 almost, it used this blue region as resistance, and we're coming close to entering that range. If you look to the left, you can see we use this previous blue region as support, and if we look over here, we spent 6 months in 2019 being held by that resistance. We finally got a monthly closure above that. If the month closes this way, currently we are there, so if the month does close this way, we could have a potential to go swing long up to these highs, 1800. So that's what we're going to see for gold. It's going to act as a major safe haven during these times of tension. And so In terms of intraday, I think I'll wait till tomorrow. I just don't want to enter a trade and then have Iran attack and then we're in trouble. So just a word of caution. If you're trading during this week or even for this month, apologize for that. If you're trading during this month, just be cautious that there could be an imminent attack that could very well destroy your account. And it's hard to predict, but the possibility is there. But I don't think the world powers will let a world war happen. And so that was gold done for you, Dre. Hopefully that analysis makes sense. So on Aussie. So yeah, if you're on YouTube chat, just recommend your pairs, and I'll take a look at them. So we'll take a look at Aussie USD, and I think we did a bold prediction for Aussie for the year end, but we'll take a look. Obviously, so the chart's pretty messy, and that's a whole year's worth of analysis. So we'll actually clean it up and just do it really quickly. So Aussie yen, we're gonna go ahead and draw our support and resistance regions as our strategy dictates, like such. And you can see overall from the monthly, we're in a nice downtrend. I do see potential for us to go lower. You can see, so we have two regions of significance, this huge support region down here and this recent one right here. You can see that we kind of used for a majority of the 2019 year, and so we did have a dip below where we're going to look like we're going to go lower to this support region at 0.64 thousand, but the last few months of 2019 we kind of pushed back above. So depending on what happens with this potential world war, we could have US strength or weakness, but right now the Aussie is looking like it's going to do a trend shift. Although it's making lower highs, lower lows, so it's still a downtrend. You can see by this trend line, it's actually a nice trend line. So let me change the color. So you can see a really nice solid trend line, nice clean touches. We got an obvious break above, but you can see we didn't enclose the previous high, so this could just be a nice fake out before we go back lower. But this high was not cleared, so for us to even take any sort of buys on Aussie dollar, a closure above this level would be key. And I'm just going to leave my mouse so you guys can see. So plot this level down. A close above this level could take us to somewhere around these highs, and that'd be a nice trade on the weekly, so a nice swing trade. But if that does not happen and we do get a bearish closure below this blue region of significance, we're probably going to go lower and the dollar strength will take over. In terms of fundamentals, the China deal will benefit the Aussie dollar, so we might see some short-term strength, especially during the week of the signing on January 13th. But for now, I think Aussie dollar is going to stay put until the geopolitical stuff handles itself. When we ended the year, we also looked at cryptocurrency, in particular Bitcoin and Tezos. So we'll take a look at that, see how it's doing. And it hasn't really moved much, and I guess during the holidays that is expected. And so just taking a look, we can see it stayed well below our resistance of 7,200, and we wanted it to clearly break that to go down to 6,000. But obviously that did not happen. It kind of just stalled, and so it's going to consolidate right now, as it's using the support as resistance. But nothing really major is going to happen until I think the US dollar data comes out on NFP this Friday, and we'll see if what investors think of the dollar. But Bitcoin has pretty much chilled, but I do think the bias of short for the remainder of the year stands. There's another crypto that we started to look at, Tezos, which is kind of fun to look at actually, since it's relatively new. So we had two setups, the 1 to 1.90, and we got that. And then we had another setup back to 1.50. And since then, I did say if we get a break below, we're probably gonna go back down to a psych level of $1. And so that's where we're kind of going right now. We're using 1.25 as support. So these are two levels that have, that we drew before the year ended, and we have price reacting nicely to those levels. So that's a nice place to end off today's session in terms of analysis. I do have two announcements. So we have two offers that will be offering all of January. All you have to do is share one of our Instagram posts to your stories, and you can get access to these two offers. So for all of January, you just have to share our Instagram post onto your story, and we have two offers. The one is a 2020 year membership for $397 USD, and you receive access until December 31st, 2020. So for one full year, you're gonna get all our signals and trading room for $397. Our second offer is a one-time payment of $997 USD for a lifetime membership and join our community for life. So if you enjoyed the sessions last year, or you're enticed by this session alone, do take advantage of this offer. All you have to do is share one of our Instagram posts to your stories, and you can get access. If you have any questions about these offers, you can chat to us on live chat. We have it running Monday through Friday, 9 to 5. And you can also email support@forexlens.com if you need clarity on these offers. And as always, at the end of these sessions, I usually offer a 25% coupon code for anyone that wants to join. This 25% off coupon code is for your first month. And so it's 25 off. And to take advantage, all you have to do is go to forexlens.com/forex-trading-room and click up Get Full Access. Fill out a form. It'll take 2 minutes, and then apply this 25 capital O, capital F coupon code at checkout. If you want to join for another free session just to see how it is, on Friday we'll be discussing our profits for the week. So you can sign up here for a free membership, and you can join on Friday's session. So with that being said, guys, Happy New Year once again. I'm very excited for this year to make some more profits and carry that legacy we're starting to build. So I'm RP Forex. I'll be logging off. I'll see you guys all tomorrow for another live session. Peace and happy trading.